Hello everyone, welcome to my channel. In last session we have seen that what are the different products available into the fixed income instrument. So we have seen the lot many products like from PPF, FD, EPF, then other products like certificate of deposit, bonds. So we have gone through the multiple products, but one point we have just discussed on high level, that is taxation. So there are different types of taxation, in short, because when you are investing, you are investing in three phases. One is that first you are putting money on monthly, yearly basis or one time into the schemes like a PPF, FD, EPF, and that is the phase is called the investment. Then based on that, every year you are getting a tax, every year you are getting the interest rate based on to the agreed rate of interest. So that is the second phase, and third phase is the withdrawal phase. So based on that, there are three types of tax saving schemes that you will that will be helpful you for choosing the FI product, that is fixed income product for your investment. So first is a triple scheme, second is a ETE scheme, and third one is a EET scheme. So these are the three schemes are there. So we'll see you them into the detail with the one simple table that will help you. So here I have listed out the scheme. So E for exempt. So there are three phases I have mentioned: investing, tax earning, and withdrawal. So if the scheme is getting the benefit of tax exemption at three phases, every three phases, for example, PPF or EPF. If you open a PPF account, if you deposit a money on monthly or yearly basis, so you will be get exemption under ATC. So while investing, you will be getting a benefit. So next one is the tax earning. So at the end of year on 31st March, you will be get a interest based on to the agreed rate of interest. So if you have invested 1 lakh rupees and rate of interest is 8,000, then this 8% is rate of interest. That means the interest is 8,000 rupees. So 1 lakh is kind of get tax benefit into the ATC. 8,000 will get a tax benefit into the kind of tax earning phase. And when you will withdraw at the end of suppose 3 year, 5 year, whatever the tax you, whatever the interest you have earned over the period of 3 4 years, and whatever the amount is present in your PPF or EPF account, all amount would be a kind of exempted from the tax. So this is a triple E scheme. So under that, the few examples is there. As I mentioned, PPF is there, EPF is there. Second is the ETE scheme. So when you are investing in National Saving Certificate or FDs, you can get tax benefit under different sections in income tax. Then when you are getting interest on this scheme at the end of year based on agreed rate of interest, it would be get taxed based on to the your tax bracket or whatever the declaration you have given to the bank. Based on that, it will get deducted. And if you are earning a interest, you have to declare it into the income tax, and accordingly you are paying the taxes on that. But when you are withdrawing a money at the end of the maturity of the FD or what are the national savings certificate, it would be a tax free. So it would be ETE scheme. Then third one is the EET. So for example, national pension scheme. So when you are investing into the national pension scheme, there are two um, scenarios. One is an individual developer and individual kind of investor, and another one is individual person getting the money into the national pension scheme account from the employer. So there are two sections under which you can get a tax benefit while investing, and then when you are earning a benefit on this uh, scheme, they are also exempted. But when you are trying to withdraw it at the end of maturity, for example, NPS is having a maturity of 60 years, so that time your 60% amount you can withdraw, and 40% amount Means you can put it into the annuity, but the amount, some of the amount is taxable while withdrawing it. So that's why it is called the EET scheme. So just to recap, we have covered the three schemes: EE, triple E, ETE, and EET, and we have also covered the examples for that. So that is a way you can decide that whether you are investing for just getting a tax benefit, or whether you want to increase your money by the compounding interest, or what are your priorities. According to that, you can choose your FI schemes, that is fixed income schemes, or the products, and you can take a wise decision. So this that's it for this session. So thank you so much for your time and patience. Do subscribe to my channel so you will get updated with the latest video. Thanks. Thank you so much.